NIO with some pretty big numbers, but all of them, I mean, really impressive here. How much is that gap widening between China growth versus Tesla? And then the kind of follow-up point then, Anthony, is how much of it is just sort of the timeline? They're a little bit later to the game, so they've got more kind of room to grow at this point versus Tesla maybe having saturated its main market here somewhat?
Well, Chinese consumer have been really gravitating towards locally made cars, and some of these new models have been really impressive.
Dynamic, analytical, and captivating. NIO Incorporated shares dipped in the pre-market session on Tuesday following the announcement of a significant organizational reshuffle. The Chinese electric vehicle manufacturer has rebranded several units to streamline its operations. Strategic New Business I is now the Onvo division, while Strategic New Business 2 has become the Chip Development Unit. Additionally, Strategic New Business 3 has been renamed the Firefly Business Unit, and Strategic New Business 4 is now the NIO Phone Business. These changes aim to clarify and focus on NIO's diverse operations. But what impact will this have on the company's upcoming earnings report?
They were lighter than expected, but their forecast is better, and they actually beat deliveries. They had lowered their guidance coming into it, but they beat that lowered guidance. So they delivered more than 30,000 vehicles in the quarter. The guidance was about 30,000. They are forecasting a stronger second quarter, and they're forecasting for this quarter for deliveries to come in between 54,000 to 56,000, which would be much better. Revenue is guiding for nearly doubling for this second quarter from a year earlier. They have seen sales ramp up in April and May, they said, after they lowered battery costs.
NIO reported its May delivery numbers over the weekend, revealing a record-breaking month for the Chinese electric vehicle manufacturer. In May, NIO delivered 20,544 vehicles, a staggering increase of 233.8% year-over-year, setting a new monthly record. This brings the company's year-to-date deliveries to 66,217, up by 51% compared to the same period last year. Remarkably, this is only the second time NIO has surpassed the 20,000 vehicle mark in a single month. The first instance occurred in July 2023, when it delivered 20,462 vehicles. Despite this impressive performance, NIO's stock is in the red on that day, although it closed 4% higher in Hong Kong, where it trades under the ticker 9866. Before the release of May's delivery numbers, Bank of America analyst Ming-Sun Lee predicted strong second quarter deliveries. His optimism was based on NIO launching its 2024 models and significantly reducing the monthly leasing price for its battery-as-a-service by up to 33%. Consequently, Lee increased his 2024 delivery forecast by 6% to 193,000 vehicles, indicating a 20.6% growth from last year's 160,308 deliveries. Alongside these delivery updates, NIO has undergone a strategic reorganization. While the new business units have been renamed, the existing department heads and reporting structures remain unchanged. The Onvo business unit now comprises 16 regional companies that serve as second-tier departments. These entities are responsible for advancing the Onvo brand, managing channel distributions, overseeing daily store operations, and achieving regional sales targets. All general managers of Onvo's regional companies report directly to Xia Qinghua, NIO's assistant vice president and head of Onvo sales and service. These changes were initially reported by the local media outlet China Star Market. Meanwhile, Morgan Stanley analyst Tim Siyao has reiterated his price target of $10 for NIO as of May 31st. For the first quarter, analysts are expecting revenue of $1.443 billion, indicating a yearly decline of 2.1%. NIO is also projected to remain unprofitable, with an anticipated GAAP earnings per share loss of 28 cents, compared to a loss of 41 cents a year ago. NIO has also released its operational report for May, highlighting significant usage of its battery swapping system. The company provided 2.11 million battery swap services in May, averaging 68,084 swaps per day, with a swap occurring every 1.26 seconds. This was an increase from April's daily average of 65,779 swaps. NIO also added 16 battery swap stations, bringing the total to 2,427 by month's end. Since its inception, NIO has completed approximately 45.24 million battery swaps, with 80.1% of owners having a swap station within 3 kilometers of their home or office. NIO's charging infrastructure expanded to 2,270 supercharging stations and 1,594 destination charging stations, offering a total of 22,595 charging piles. In May, 55.4% of NIO's energy replenishments came from battery swap stations, while the rest came from home chargers, third-party stalls, and public chargers. The company added 503 new charging stalls in May and provided a little above 1 million charging services, mostly for non-NIO vehicles, serving over 190 electric vehicle brands. Additionally, NIO performed 18,312 battery upgrades in May, bringing the total to 232,026. In vehicle deliveries, NIO reached a record 20,544 in May, up 233.78% year-on-year and 31.52% from April, totaling 515,811 cumulative deliveries since inception. These milestones highlight NIO's rapid growth and widespread adoption of its battery swapping technology. What future milestones lie ahead for this ambitious electric vehicle pioneer? Share your thoughts in the comment section below.
News from China and deliveries for NIO, some numbers over there that have the stock down. We did get a pretty decent bounce recently for BYD and others after their deliveries. So what's up with NIO here?
So NIO, they're out with a mixed bag in terms of their results. NIO reporting a loss of 33 cents a share. The expectation was for a loss of 31 cents a share. Revenue came in at $137 billion. The expectation was closer to $1.5 billion.
NIO's latest report reveals a challenging financial period, with total revenues dropping to $1.37 billion, over 7% down from the same time last year and falling short of the anticipated $1.44 billion. Despite a modest 3.2% decrease in vehicle deliveries, vehicle revenues plummeted over 9%, mainly due to a reduced average selling price following adjustments to user rights from June 2023. There is a silver lining, though. NIO is improving its vehicle cost structure, with vehicle margins rising by 410 basis points year-over-year to 9.2%. which in turn boosted overall gross margins by 340 basis points to 4.9%. Yet, the company's heavy operational expenses aimed at expansion are leading to higher operating and net losses compared to first quarter of 2023. NIO's financial health is under strain, with cash reserves shrinking from $8 billion at the end of 2023 to a little above $6 billion by the end of quarter one. Working capital dropped over $678 million sequentially. To navigate the capital-intensive nature of its industry, especially with the upcoming launch of the Onvo brand and construction of a third factory, NIO likely needs another significant capital infusion. Over recent years, NIO has consistently missed its ambitious growth targets due to a series of setbacks, including COVID-19, supply chain disruptions, and production upgrades. The plan to reach 30,000 deliveries per month by early 2023 fell short, with no quarter hitting even 20,000 units monthly. Looking ahead to Q2, NIO's guidance offers mixed signals. While revenue projections between $2.297 billion and $2.373 billion surpass the Street's $2 billion estimate, the delivery forecast of 54,000 to 56,000 vehicles seems underwhelming, especially considering that April and May already accounted for over 36,150 deliveries. The next growth phase hinges on the upcoming Onvo brand's release later this year. Initially targeting around 10,000 units monthly for the L60 midsize SUV, with a second model expected in 2025, revenue growth should accelerate in 2025. However, it remains to be seen how margins will hold up as NIO enters a more competitive market segment. NIO's recent organizational reshuffle, alongside its remarkable May delivery figures and strategic business adjustments, highlights the company's proactive stance toward growth and innovation within the competitive electric vehicle sector. As it continues to break records and adapt its operations, NIO's dynamic approach positions it for further success and evolution in the evolving market landscape. Despite facing financial challenges and missing growth targets in the past, NIO continues to make strides in expanding its product offerings, enhancing operational efficiency, and increasing its market share. As NIO prepares to launch its new Onvo brand and navigate the construction of a third factory, the company's ability to secure additional capital and sustain its growth momentum will be closely watched. With its ambitious goals and innovative technologies, what lies ahead for NIO as it continues to shape the future of electric mobility? Share your insights in the comments below. If you enjoyed this video, you may also like our hand-picked, action-packed newsletter about NIO. Subscribe now at wiseinvesting.com. And that's it. Make sure to smash the like and subscribe buttons down below. Additionally, if you want to know about NIO stock, just click this video here. Thank you for tuning in and stay tuned for more exciting content in the future.